Let's look to disposal of fixed assets. There are many types of disposal. It can be that we sell an asset for cash, resulting in gain or loss based on the sales price. It can be exchange an asset for another asset. It can be also removing an asset from services without any cash proceed, or it can be donating an asset to civil organization. The accounting for disposal of fixed asset. The first thing that we need to recognize the event. The disposal of fixed asset is significant event impacting company's financial statement. So it will impact the balance sheet. We have the recognition. That means when asset is disposed of, it's removed from the balance sheet and its carrying value is adjusted. So if we purchase equipment, when we sell it, we need to remove it 100% from our assets. And disposal impacts income statement as well through gain or loss, and cash flow statement through cash received or paid. We calculate gain or loss based on this information. We have carrying value, which is the original cost of the asset minus the accumulated depreciation. This is, we call it carry value, or the net value for our asset. Now we have the proceeds for disposal, the cash that we received when we sell our equipment. So the difference between these items, the amount that received and the carry value, we call it gain or loss. If the value of the sales is higher than the carry value, we call it gain. If the opposite, that means our sales is lower than the carry value, that means the company is making loss. We are selling our equipment less than its accounting net value. So we need to have proper bookkeeping and documentation for this transaction. So we need to maintain a recording for all the transaction related to fixed asset. All the documentation should be done, and the transaction accurately should be reported on time in the period of the disposal of asset. Here we have an example for the disposal. So a company A buys a delivery truck for $30,000. It's expected to last 5 years. That means the useful life is 5 years and has salvage value of $5,000. So the truck depreciated $5,000 per year, which is calculated by $30,000, which is the purchase value, minus the salvage value, divided by the years, the useful years, which is 5, and we get $5,000 per year. So after 3 years, this truck is sold for $18,000. The accumulated depreciation is $15,000, which is 5,000 multiplied by 3 years, and the carrying value of the truck is 15,000, which is 30,000 minus the accumulated depreciation. The company sells the truck for 18,000, which is higher than its carrying value of 50,000. So the company is making plus value gain for 3,000. So this gain should be reported in the income statement. So we will see in the Excel file step by step how to do this transaction. So this is summary for the transaction. Original price 30,000, accumulated depreciation for 3 years 15,000. We get carrying value for 15,000, and the sales price is 18,000. So gain on disposal is 3,000. Now we will go to Excel and we start to do our transaction. So the first transaction that we have to do, which is the purchase of asset. And we said purchase of truck for the amount of 30,000. We paid via cash. So we report the cash movement. So we'll put it in credit. I'm going fast because you already seen that before in the previous transaction. So here we need to put the type of cash. This is purchase of equipment. So this is the first transaction we have done for that. Then we need to report the depreciation. So this is depreciation for 3 years. And we use the account of accumulated depreciation. Here we put the same description and we put a value for the depreciation. When we go to the financial statement, you see that we have property, plant and equipment of 30,000. We have accumulated depreciation for 15,000. The total fixed asset is 15,000. Next, we have information. The company sold the truck for 18,000. So here, what we have to do, the first thing that we need to do is to cancel the depreciation. So we cancel the depreciation. Here the description will be recording sales, recording the sales for 18,000. Okay. So we cancel the depreciation, 15,000. If we go to the financial statement, you see the depreciation is canceled and still we have property plant for the total amount. We need to continue with our transaction. So we said that we get cash for the amount of 18,000. So we have to put it here and put the cash types, which is proceed from sales for equipment. So here you see that the total of the debit is 33,000. Let's move to credit side. We continue the remaining transaction. So the next transaction that we need to do is to cancel the purchase and equipment. So this should be canceled. We need to deliver this truck. We get it out from our accounting. When we say that we get it out, that means it will be included. And the value for the truck is 30,000. Then you see that we have 33,000. In the credit side, we have only 30,000. So here we need to add another transaction, which will be other income that we receive, which is related to gain on disposal, and 30,000. And the 3,000 is the gain on disposal, which is the difference between carrying value, 18,000 minus 15,000. Here you see that we have debit of 30,000 and we have credit of 33,000. So we have finalized our transaction for the disposal. We go to the financial statement. You see that our property plant loan, there is nothing shown here. Okay. We go to income statement. You see there is 15,000, which is related to the depreciation for 3 years, because we all in 1 year. Then we have other income, which is not related to our accounting, which is 3,000 US dollar. This is gain on disposal. Now let's see the cash flow statement. Purchase of equipment, 30,000. Then we have proceed for sales for equipment, 18,000. So here we have cash flow from investing activity is minus for 12,000 because the amount of the purchase is higher than the amount of the disposal. Now we have another example for loss. So the same example, the company buy a delivery truck for 30,000. It's expected at least 5 years. So this is the same transaction as before. The main difference is that after 3 years, the truck is sold for 12,000 instead of 18,000. Here the company shown a loss on disposal for 3,000. Now let's do the transaction. The first two transaction is similar as before, the purchase of 30,000, the depreciation for 3 years is here. Then we come to the recording the sales for the amount of 12,000. So here first we need to cancel the depreciation, accumulated depreciation for 15,000. Then we need to record the cash and we get the value of 12,000. Then the truck is delivered, so we need to remove it from accounting. So it costs us 30,000. As you see that our debit is 27,000 and our credit is 30. So we need to add another transaction, which is related to the difference, gain or loss. Here we said that we have loss. So we need to go to accounting to check which account that we can use related to other expenses. So we put this account and we put the 1,000 in debit. When we select total debit, we get 30,000. Then our credit is 30,000. So this is the final transaction for recording the loss on us.